Good evening, everyone. A very warm welcome to all of you on third edition of Policy and Inclusion Debate Series. Policy and Inclusion Debate Series is a collaborative effort of Center for Equity Studies, India International Center, and The Wire. And we see it as a small step towards creating a platform for meaningful discussion around public policy discourse. I would like to first introduce our panelists. First is C.P. Chandrasekhar. He is faculty at Center for Economic Studies and Planning, Jawaharlal Nehru University. Devaki Jain, she is a feminist economist and she has contributed significantly towards the cause of social justice and women's empowerment. Rajeev Malhotra is a development economist and professor at School of Government and Public Policy at U.P. Jindal Global University. And Montek Singh Ahluwalia, who is a noted economist and former deputy chairman of then Planning Commission. The debate will be moderated by Director of Center for Equity Studies, Harsh Mandar. I invite all the panelists to come onto the stage.
I'm grateful to all of you for gathering on a cold December evening for this discussion. And I'm grateful to Devaki, to Montek, to Chandrasekhar, and to Rajeev for making time for this critically important discussion. And I'll try to explain why I think it is so important to have this discussion at this, particularly at this moment of time. An anthropologist who works in UCLA, Akhil Gupta, asked a question some years ago. He asked a question, how many people die in India of completely preventable causes? Basically, how many people die today of hunger because they lack health care, things that can eminently be prevented. And he came up with a figure, a very conservative estimate of 2 million people. Now, to put that figure in perspective, the number of people who died in the last great famine that our country has lived through, the Great Bengal famine in 1943, was about 3 million. So, in a sense, what Akhil Gupta is saying is that something like the Great Bengal famine is happening every year in our midst, and we don't even notice. Oxfam brings out an inequality report every year, and they have calculated that 42 people, much less, fortunately, than the numbers that have gathered in this room, own as much wealth as half the world's population. And they have also calculated that a modest tax of 1.5% on the dollar billionaires of the world would be enough to ensure that not a single child sleeps hungry, not a single child is deprived of health care, and no one would be deprived of a decent education. But this is not happening. Why I felt that this discussion is appropriate and timely, and although some of us have gathered to listen to this discussion face to face, we hope that with The Wire putting it online, it might contribute to a larger discussion. We all know that we are going next summer into a very significant general election. And one part of the discussion in the public discourse will of course be on the rising climate of hate and violence against minorities. But the other will be about farmers' distress, about job creation, the absence of healthcare, the condition of our schools, the demand for pensions for the aged, and so on. A group of us have come together, initiated by Prabhat Patnaik, with people like Gopal Krishna Gandhi and Justice A.P. Shah and many other people, who are trying to put together a kind of a suggested manifesto for political parties to consider. I know that there are many other such initiatives as well. But the question that immediately would come up in each of these is, yeah, great ideas, but where's the money? And that's why I think it is so important to be able to answer the question, where's the money? We don't have the money to raise our public spending on health to 3%. We don't have the money today to double our investment in education to 6% as is prescribed. We don't have money for social housing. We don't have. Dr. Manmohan Singh had once mentioned that out of all the demands that we who believe in a welfare state placed, the one that he had the least quarrel with was the idea of a universal pension. But again, and a universal pension should be pegged in the formal sector. It's pegged at half your last earnings. We are saying a universal pension should be pegged therefore at half the statutory minimum wages. There can be no moral argument against it. The argument is that we don't have the money. And I think that therefore, as different political parties will be drawing up their manifestos, we need to argue that we don't have the money, according to me, and this is for the panel to respond. We don't have the money because we choose not to have the money. And the money that we have tends to be poorly. There's huge corruption in the collection of this money, and finally, the money that we collect, the public money we collect, tends to burden in proportionate terms people of disadvantage, economic and social disadvantage, much more than the people of great wealth. That's the premise with which I am initiating, and my colleagues in the Center for Equity Studies want to initiate this discussion. We might be right, we might be wrong. So my first question to each of the panelists is literally, we have two questions. The first is, are we taxing enough? And the second question will be, and if we can do it, are we taxing the right people? And then we'll open up, after 2 rounds of discussion with the panel, we'll open up to questions from all of you who have gathered this cold winter evening to participate in this discussion. I begin with Rajeev, Dr. Rajeev Malhotra, because Rajeev actually had worked in the finance ministry closely with, I think, Pranab Mukherjee Saab when he was finance minister. Yes, and we had a discussion, and he has put together a paper for our last India exclusion report on this question. So I thought that since he's given a lot of considered thought to this question, we'd start off with asking him for his opinion.
Thank you, Harshji. Good evening, ladies and gentlemen. The question on the table is, do we tax enough? But let me take the liberty of just adding a tail to that. And that tail is, do we collect enough? When we talk of taxing enough, we are looking at the tax policy, we are looking at the tax rates. And of course, there are variations, there are differences across countries, even similarly placed in terms of economic development on the way they have structured their tax policy. But we are not too much out of line with some of these comparable countries. The challenge, I think, is that given whatever is the tax policy and the tax rates that go in that policy, why is it that we are not collecting enough? And one could focus on that as well. So let me just share with you what we tried when Harshji insisted that we should try putting a number to and try to quantitatively try answering this question of do we tax enough. We thought through it, and then we looked at different databases, and in fact in the chapter which he alluded to in the previous India exclusion report, we looked at 3 sets of data. One was the public finance statistics cross country, and we were trying to look at the fact that given the level of economic development, is India taxing enough? Or is India able to mobilize enough tax revenues? And the answer to that question was perhaps no. You had economies like Kenya, half as small as the Indian economy and with much lower average income levels, having a tax GDP ratio or tax revenue ratio higher than India. Of course, there are other emerging economies where Brazil, for example, it has a tax GDP ratio of close to 35%, give and take a few percentage points. But then, one could argue that the GDP of Brazil is far higher than the GDP of India. However, the kind of takeaway from that analysis of that data set was that certainly India could do much better if Kenya, an economy like Kenya is doing so much more on tax mobilization than India could certainly do. But the more interesting question was the second question we tried addressing, and that question was, why are we not collecting enough? And we just looked at one segment of our tax revenues, that is the segment related to direct taxes and income taxes. And as you know, we don't have income data, and we don't generate data on incomes in India. And nor was for an extended period of time the tax collection data made public by the Revenue Department. So we had a tough starting point as to figure out a way to build up some estimates of what is the nature of tax avoidance, how much, and that could come about only once we could figure out what is the underreporting on income. So what we did was we generated an income distribution from the NSSO consumption distribution using some transformative assumptions, and checked it for certain parameters. Normally, statistically, if you have an average for a series and you have its deviation, you can generate a distribution for that series. So keeping some of the parameters that we could cull out from the literature, we developed a income distribution for India for the year 2011-12. Now let me just share with you, in that year, there were 3.24 lakh income tax payers in the country. And the total income tax collected in 2011-12, and I'm just talking of income tax, no corporate tax, no indirect taxes. The total income tax collected from these 3.24 crore people was 2 lakh crore. So when we generated this income distribution and validated it to the extent it was feasible, we tried estimating what would be given the tax laws as they were applicable for 2011-12, what would be the likely number of taxpayers if they had all reported their income more genuinely and in line with the distribution that we had created. So the figure of 3.24 crores became 8 crores on a very, very conservative assumptions. And the tax collected by from the tax collection of 2 lakh crore became 8 to 14 lakh crore depending upon the assumptions. In other words, this amount was good enough to wipe out the central fiscal deficit that year. It varied between 4 to 7% of GDP in 2011 and 12. So, one is not arguing that that is the state of affairs in reality, and this is a very preliminary methodology, and it needs to be validated, as I said, including with the income tax data that is available with the government, but which is not in the public domain. It has now become somewhat available. One needs to validate it, but it does reflect the fact that there is so much of underreporting of income, as a consequence of which there is tax avoidance, and the tax avoidance is significant. Now, which then limits the capacity of the state to deliver public goods. The third thing that we looked at, I'll just take 2 more minutes. The third thing that we looked at was, how is the government trying to raise its tax revenue? What kind of incentives it is going? So there's something called tax expenditure. What is tax expenditure? Over a baseline tax policy, the moment the government decides that it wants to tinker around with tax rates, so you work out the revenue foregone on account of having to move from that baseline tax policy rates to the proposed one. And you find that if you look at the whole of the last, I would say the period between 2003-4 to 2015-16, the tax expenditure went up to as high as 90%, which means for every additional 1 rupee that the government was trying to collect through taxes, it was foregoing 90 paisa. Of course, it came down gradually towards 14-15, it was down to about 60%. So from 92% to 60%. Now, that's another question that one needs to ask. And one needs to ask why the so-called incentives being given to incentivize tax compliance are actually not working. And the short answer for all that is that, you know, our tax laws have been far too long in the play. And we have made so many tinkerings over successive years, largely led by, you know, lobbyings being done by various stakeholders, the corporate lobbies and the other lobbies. And we have actually rendered the act almost unworkable. And the result is that you end up having a tax expenditure which is as high as that. So the conclusion from this part of the analysis was that, of course, we are not able to mobilize enough taxes. I'm not going into the question of whether we are taxing enough or not. There are other implications to think and answer that question. But certainly, given our tax policy, we are far short of what we should be collecting. And as I said, what we are missing out could be as high as the central government's fiscal deficit, which is a huge number. Now, let me, before I close, let me just underline, this was an extremely preliminary exercise. And we did whatever best we could do to validate the results, the numbers that came out of this exercise. But it's a starting point, and one could refine this further. And the intention, I think, should be that if we can count what we want to count, we can certainly do something to address that particular issue. So if we can get a we can get a finger on how much we are losing out by way of our tax policy and the way it is being administered, certainly we can, you know, be a little more conscious of what we need to do in order to set that right. I'll stop here at this juncture and then come back.
Thank you so much, Rajeev. I think you've given a lot of food for thought for the panel. I move next to Dr. Montek Ahluwalia, who, while we still had a planning commission, headed it for as much as a decade, and has been, even before that, at leading positions on India's finance policies. I don't think he's worked on tax as much as the spending of tax in planning, but I'm sure he would have many insights. Do you feel that in order to fulfill India's plan aspirations, India really needs to get out and draw more money in, public money in?
Well, Harsh, thank you very much for inviting me, and good evening, everybody. I'll be actually quite brief. First, an introductory comment. You know, you started the discussion on a much broader frame of where's the economy going and what's happening to inequality, etc. And then somewhere 5 or 6 minutes later, you boil down to some very narrow questions on tax. So I guess most people have come to talk about tax, so I'll limit myself to that. But I do want to say that the issues that you raise, the larger issues, are not going to be resolved just by the tax side. I mean, it really requires a multidimensional sort of approach. How do you get rapid growth? How do you get employment? How do you deal with technology changes? And these are not just problems facing India. They're all around the world. Having said that, let me try to focus in on the tax front. One, I mean, there is virtually no economist I know who for the last 20 years hasn't said that we should be garnering more tax revenue. And I think, as Rajeev said, I mean, I'm not sure which paper he was referring to. I should try and get a look at it. But I've seen others. And the bottom line seems to be that controlling for per capita GDP, this is, by the way, very important, because it's no good saying Brazil, you know, taxes more, because Brazil is about 3 times our per capita income. But I think controlling for our per capita income, India's tax ratio to GDP, and that's not just the center and the states put together, maybe should be at least 4 percentage points higher. And some more aggressive sort of tax mobilizers would say even more than that. So let's just take 4 percentage points. Now that's a huge pot of money. I mean, you talked nostalgically about the Planning Commission. In the old days, you know, the total size of the plan used to be around 4.5%, 4.7% of GDP. So if you get that much money, you can imagine. Now, whether we would use it well is a separate issue, and you need a totally different kind of debate for that. So why are we not getting it? You know, the simple answer is that we have done no reform. We've done some reforms in tax policy, not nearly enough, but we've done some. We have done no reform whatsoever in tax administration. I mean, Parthasarthi Shom, who knows more about this than I do, had submitted in the last year, I think, of the UPA, a huge 3-volume set of reports indicating what are the administrative mechanisms that we need to adopt in order to get to a modern tax system. And for some, I mean, this is not a matter of tax rates, GST, this, that, and the other. Those are also important. But this is, you know, how does the tax administration work? And we haven't done that. And not only have we not done that, whereas there's a huge amount of interest on the part of economists and financial analysts and all the guys who write in Business Standard, and no offense meant to Business, Economic Times, Financial Express, the work, maybe even The Wire, dare I say it. I mean, they spend a lot of time on the tax policy, but I don't think I've read a single article on tax administration. So maybe Rajeev at some point, since he was in the finance ministry much more recently than me, can give us some sense of what's happening in that area, and is anything going to happen? That's one point. Second, you know, if you look at the tax, just the tax policy structure, my guess is that the GST is an important move forward. It's been 15 years in the making. I mean, the first reference to that we needed GST was 15 years ago. Anyway, it's good that it's happened, and as I think Venu mentioned, that it kind of began rather messily, but then these things have got corrected. So let's hope that by next year some of these things will be taken care of. So that part, maybe we're just about ready to see the benefits thereof. I think on other issues, there's no agreement. I mean, for example, in my view, one of the things we should be very clear in our minds about, and if you take a vote in this hall, I'm not sure whether I would even have a majority voting for it. And that is that, you know, the optimum extent to which we should be pulling in money through customs duties is very low. Most people are not prepared to accept that proposition. So this is something I want you to think about. I mean, it has implications. The implications are, I forget how much we are raising from customs duties now, still below 2%, but still closer to the top of 2%, closer to 2% than to 1.5. Now, if we were to drop that to, let's say, 0.5%, that's straight away 1% of GDP, which has to be made up by other taxes, in addition to the 4 and 5% that I talked about. So this is one structural change. And the problem is, that as long as we don't have a lot of money coming in, the government will say, oh, we can't do that. By the way, I'm not criticizing any. I mean, I've been in the government for a long time, and all these points were made earlier. This is an area where not everybody agrees. So this is one point that I think you need to think about. That's one. Two, as far as the corporate tax rate is concerned, there's no question that our corporate tax rate is way above international levels. So that's the second question. I mean, those who want more tax ratio, are they prepared to say that lowering the corporate tax rate is not the same thing as fattening that guy who is being carried by a poor Ahmad in the cartoon that has been just removed? So that's the second issue. Third,
it's there behind it.
Oh, it's there. Okay, yeah, that's right. Okay. I'd got to like it rather, so I mean, it's a pity that The third, and this is a huge gap, we are probably one of the 2 or 3 countries which doesn't have an estate duty or an inheritance tax. I think that's something, in a world in which there is now growing concern about inequality. It's also true in India. It's also probably true that inequality is increasing, although I must point out, to my knowledge, there is no official estimate of inequality in India. And international databases vary hugely. Okay?
Income or? You're referring to income inequality.
Income inequality, yeah. Well, what other inequalities?
Consumption.
Consumption, I mean, the rich don't consume beyond a point. So obviously in consumption, the consumption inequality in many countries would be much lower than income inequality, and that's what people are really concerned about. And then people start focusing also on wealth inequality. I won't go into that. That's more complicated. But, on inequality, I mean, everywhere in the world, a sensible intergenerational equalizing tax transfer involves some form of either estate duty or inheritance tax. The two are different because the estate duty is levied on the estate itself. So the size of the estate determines the rate of tax. If you convert that into an inheritance duty, then if 10 people are getting the inheritance, each inheritance is 1/10 of the total estate. So the tax rate might end up being lower. So that's just a mere technicality. I would have thought that with a fairly high exemption limit, it makes sense to have such a tax. But I should warn that the objective of such a tax is not actually to raise revenue. I mean, the objective of such a tax is to persuade people to put it into philanthropic trusts. Admittedly, they then control it, or their children control it. But actually, it's much better if rich people get their children to control philanthropic trusts and let professionals run their companies. Because in the absence of that, they're getting their kids to run the companies with lots more damage to society. So I don't think the estate duty is going to raise a lot of money. But if it works the way it does elsewhere, I mean, after all, the United States has an enormous amount of philanthropic stuff, which is underlying a lot of their superior educational institutions, etc. So essentially, all the robber baron activity, and believe me, these guys were really something in the early 20th century, all of that got legitimized by creating philanthropic trusts. Our fellows haven't done that yet. So I think that's one area that we do need to think about. And of course, on income taxation, a lot of the pink press crowd like to think that our tax rates are too high. They're not. I mean, a maximum tax rate of 30%, even with the surcharges that's added, is actually quite modest compared to most countries. You could argue that, the really big, incredible lacuna in India, the two things that are simply not taxed. One is agricultural income. Okay? Now, in a world in which we're busily giving farm loan waivers and talking about rural distress, I don't know what Harsh thinks about this, but this is an issue. It's simply, it's not honest to say we're going to fix the agricultural sector if you don't also say, what are we going to do? Now, mind you, it's not that the Constitution prevents agriculture from being taxed. It simply says it's the state that can tax agriculture. No state wants to do it. So, I mean, how do you address that problem? I think those, to my mind, were the big questions on which people should take a view, and hopefully the discussion will bring them out.
Two exceptions. You said was agriculture. Which is the other? You said two exceptions.
That's a terrible thought. Now, what was the two? The thought has slipped from my mind. But yes, I have. Yeah, sorry, I now get it. The other unbelievable loophole is property taxation. You know, I would suggest that those of you who have friends abroad, just write to them saying, what is the tax rate that you pay as a percent of the value of your house? And calculate your own property tax. And you will find that we are paying probably 1/100th of the property tax that the United States does. So, you know, when we talk about, I mean, the other side of the coin about what is it that we need, there are many reasons why we need money. I mean, I was making a little calculation myself. And I think most governments have talked about health. Government expenditure in health should be up by 1% of GDP. So that's 1%. Almost certainly for education, if you want quality education, and we don't have quality education. Not only that, we have no intention of delivering quality education the way things are. You probably need another 1.5% if you're going all the way up to secondary school and so on. So that's 2.5%. You know, you almost certainly need at least 0.5% of GDP more in defense. Because frankly, defense as a percent of GDP has been falling. Now, if it was also our view that the geopolitical neighborhood that we live in has become so aggressively peaceful that we don't need this, they would be okay. But I'm not aware of a single person who would come to that conclusion. So add another 0.5% on that. Almost certainly hard infrastructure, of which we just don't have nearly enough. And I'm assuming that a lot more private investment in infrastructure will continue to be encouraged, and that the problems which hold it back will be fixed. And there are problems, but they can be fixed. You still need about 1% more in public infrastructure, because, you know, the private sector is going to do the work in the sort of fancy areas. They're not going to do the work in the backward parts of the country. So if you and the other area where you desperately need more money is R&D. Now, you know, I mean, we have these wonderful sort of news treatments that keep comparing China as taking a leadership position in AI, and the implication is, why aren't we doing that? But the difference in R&D expenditure is a huge difference, quite apart, by the way, from the fact that our research establishments do not lend themselves to using the money well at all. But that's a separate issue, but still, you know, you can't do much research if you don't even have the money. And I'm talking about agricultural research, for example, should have a top priority. Easily add 0.5%. That means that on the expenditure side, before you do any welfare calculations, you need to plan for 4 to 4.5% of GDP. Now, to that, I agree with what has been said completely, that, you know, the fundamental pillars of a social democracy, or a capitalist social democracy, which is what we're really talking about, is that there must be some government support for health insurance, there must be some unemployment insurance, and there must be some old age support, okay? Now, nobody says, by the way, that all this should be without any contributions. I mean, elsewhere in the world, social security is paid for by the public. The reason why Brazil has such a huge ratio of tax to GDP is because a lot more of their labor force is in the formal sector, and they actually pay for it. Now, we have not got that, and even in government, for example, I mean, we pay very little for CGHS. We could very easily build in a system in which those who can afford to we haven't thought about these things. And frankly, we haven't thought about these things because we haven't thought that these are pillars that are going to have to expand. So, the expenditure you need for growth, that's a big order. The expenditure you need for social harmony, that's another big order. What do you do to your tax system to generate the money? And what are the things you can stop doing? Very little thinking is going on that. I mean, if you really want to do all of this, you would absolutely get rid of virtually every public sector activity which can be done by the private sector. Now, this was first said by C. Rangarajan way back in 1996 or something, when the first United Front government came in, right? Different governments have repeated it to different degrees, but we are simply not prepared to do it, period. I'm very amused to read in the newspapers that we are finally thinking of selling off Scooters India. You know, I used to work for Prime Minister Rajeev Gandhi, and in 1986, there was a proposal to sell off Scooters India. And Rahul Bajaj actually even offered to buy the damn thing with some modest adjustments. And for a while, it looked as if it might happen. But when it came to actually getting it done, the conditions that were imposed made it impossible for anyone to buy it. That's going back to 1986. It's still with us. So frankly, I mean, these are the areas that if you break away from just taxation and think of the broader framework, these are the areas. And let me say on this, not everybody will agree. So you first have to sit down and have a proper discussion. Otherwise, we're just sort of like ships that pass in the night, not really communicating. Thank you all.
Thank you so much. Both Montek and Rajeev have laid out my own list of what we would need as a percentage of GDP would be probably much larger.
Absolutely.
Prabhat Patnaik has calculated that for universal social rights, we'd need something like 10% of the GDP of greater expenditure, and that's somewhere why this discussion is so critical. I now call upon Dr. Devaki Jain, who's just for the audience, we will, I think, just do one round from our side, and we'll open up for discussions after this. Dr. Devaki Jain's really one of our pioneer economists, feminist economists, an economist who's feisty, who's original, and deeply thoughtful. And she needed a little persuasion to join this panel, but now that she's here, I'm sure she'll have some interesting things to tell us.
I'm sorry I'm going to spoil your speech. I think what has been said so much is so different from what I want to say that I think we should allow Chandru to speak so that the bundle of you who want to talk about tax and will talk about it, and I would be talking about inequality.
Okay.
So
yeah. No, so let that happen if she wants it. So, Dr. Chandrasekhar, you've heard a lot of what is being discussed. I'm partisan enough to state that I hope we see a new government next year. But it's not enough to hope for a new government. We have to hope for a new government which does many things differently. And what would you see a new government doing on taxation?
Okay, the way it's going, it doesn't seem to be much of a debate. We seem to be agreeing with each other on most things. But let me start by saying why is it that this question, which is such an obvious question, has been posed so many times in the past, persists and remains unanswered in practice, in actually being able to find ways of raising the tax GDP ratio. I think to address that, we need to just observe two tendencies, which of course have gained momentum over the last decade or so. The first is, whenever there's any discussion on fiscal policy, the emphasis is on prudence. The whole idea is you've got to be fiscally prudent. The whole idea is we should keep the fiscal deficit under control. In terms of simple arithmetic, basically the assumption is you said, where is the money? So the assumption essentially is that there's not much you can do on the tax side, the revenue generation, additional resource mobilization side. So therefore, if you want to be prudent, the only thing you can do is to cut expenditures. So even those who otherwise might say that there exists a whole set of areas in which we need to undertake expenditures, whether those are social sector areas or any other set of areas, when it comes to the crunch, would actually pose the question, so where is the money? Because the assumption is that there's some things which are given in a simple arithmetical subtraction, that you have a certain amount of tax. If you take away a certain amount of expenditure, you have a certain deficit, and if that deficit cannot be more than 3.3, whatever it is of GDP, then what can you do about it? The second thing is that, which has been a sort of longer term problem, and again is sort of got strengthened in the years of liberalization, is that there has always been an argument that since we've chosen a mixed economy mode in which the private sector has an important role to play, going in for high rates of taxation, or going in for taxation both of income and of course of corporates and of wealth, would result in a situation where on the one hand we create disincentives to save and invest, because why would people want to save and invest if they get more money tomorrow, you're going to tax away a significant chunk of it. And the second, of course, is the whole point is that if you do that kind of thing, compliance is going to fall. People are just not going to pay taxes. They're going to find ways of evading, avoiding, whatever it may be. So that, of course, the worst form is the Laffer curve. You basically, unless you cut taxes, you won't get more revenue. And that's the basic argument. So if you look at this kind of a discourse, essentially, we have got trapped over a period of time in a kind of, by we, I mean the general economic discourse, where we don't pose the hard questions of how do we need to push the frontier in terms of being able to mobilize additional resources. Now, in this, I agree with what has been said. We're really talking about, even if we take similarly placed countries with even if we take Senegal, for example, India's tax GDP ratio of whatever 16-17% center plus states is below that. Of course, there are others like South Africa and Brazil and so on, which have much higher tax rates, tax GDP ratios. The second thing is that, the issue is not just an international comparison, because it doesn't mean that those countries are necessarily doing enough. Possibly there are people there who say that we need to do more. So what we are essentially looking at is we are looking at what exactly is the level of inequality and the level of surplus in your system, such that you can actually tax away a part of the surplus in order to be able to redistribute in fashions which give you partly development and partly give you certain welfare benefits. And if we look at it in that sense, we know that India is an extremely unequal society. Its Gini coefficient, to the extent that we have from non-official income surveys, is as high as Brazil's perhaps, or even higher. We know that wealth inequality is huge. Shorrocks, Credit Suisse, etc. have told us that top 1% have 50% of the wealth or something of that kind. So we have huge. 70%. Yeah. So you have this huge amount of inequality, both in terms of income and wealth, and therefore you should expect that there is a substantial degree of surplus which is being accumulated in the form of wealth over a period of time, and therefore, if you look at it in terms of the actual and the potential economic surplus, what Baran called the potential economic surplus, because a part of the surplus is not used as surplus for accumulation processes, but is actually just wasted in inconspicuous consumption, advertising, and so on and so forth. There is a surplus there which can be tapped in order to be able to get a significantly larger amount of GDP in terms of the percentage of GDP as tax revenue. So the issue is if there is this, and in fact, if you look at two things, I'll just briefly mention. If, for example, we look at the ratio of profits to value added in the organized sector as comes out of the annual survey of industries, it's virtually like an open jaw. Once you get past, let's say, the early 1980s, where you're actually having the share of profits to value added just rising hugely, and the share of wages to value added actually going down. And this is because of the fact that while productivity has been increasing over a period of time in the organized sector in terms of value added per worker, you actually haven't seen very much by way of real wage increases in the organized sector. And the second thing is, if you look at the national account statistics, and if you look at surplus, that is taking out the compensation to employees, and you look at the surplus as a proportion of NDP, that has actually virtually gone up by some 8 to 9 percentage points over the 3 decades ending in the 2000s. So you actually have had significant increases in surplus. So therefore, we are obviously talking about the need for a range of taxation, in which I do think one is, of course, there are many which have been mentioned. There is a certain flexibility, I do think, even at the level of income tax rates, but for the super rich. But we had something called an estate duty and a gift tax, which gave us, I think, 0.1% or something of GDP. That was taken off and a surcharge was put. So if you actually go back to both a wealth tax and a wealth tax, which is, of course, property, but which should also look at financial wealth, because an important form of accumulation of wealth in recent years has been in the form of financial wealth and in the value of financial assets. Of course, there are issues, they are marked to market and so on, but still there is significant financial wealth. So we need a wealth tax, and we need an inheritance tax. There are people who are inheriting large amounts besides spending them on marriages and building Godzilla warehouses in the middle of Bombay. There are much else that they do with their wealth, which needs, and that needs to be, when inheritance, we need to tax that. And there is, I think, of course, also an importance of thinking about ways of actually taxing financial incomes. And the government did, after a long period of time, go in for a Securities Transactions Tax. That Securities Transaction Tax is 0.1% on purchase and sale. There's a lot more which can be done. It also has positive effects in terms of preventing speculation in stock and debt markets. And I think a transactions tax there can yield significant amount of revenue if you're willing to sort of hold out. And besides all of this, I think that there is a larger issue in terms of the fact that when we are going about looking at the tax rates we can impose, besides looking at what are going to be the consequences of those rates in terms of what might happen to markets, what might happen to incentives, etc., we also need to actually get rid of those two problems where we actually think that, you know, there's one area in which we should be very careful. We cannot touch the taxation side. If at all, we have to look at the expenditure side and worry about prudence, and therefore cut expenditures over a period of time. Now, besides this, and I think it was mentioned quite clearly, we also know that there's a lot of tax which just can be collected even within the current tax law. And just look at the political economy of language. If you keep fertilizer prices down and give a subsidy again, and help the farmer, assuming that it goes to the farmer, of course, that's a subsidy. But if you actually give something to the corporate, that's a tax expenditure. So one is a tax expenditure, that's a subsidy. One is populist, and the other is encouraging productive activity. But more important, that this kind of thing results in a situation where at different periods we have given up so much. For a long period of time, starting from 2003 right up to 2018, it's only just brought back. We didn't have a long-term capital gains tax. It was brought down to zero in the 2003-04 budget, which essentially meant that if I buy a stock and hold on to it for 366 days, independent of the return I'm making, it's zero tax, which is basically saying I'm going to create for you a tax haven in the securities market. Even the United States has a 15% tax on long-term capital gains. We gave a sector which was generating the most revenue first a 10-year tax holiday, and then we extended it for 2 years. Virtually, there used to be these threats on television that if you actually put a tax on the information technology and the IT-enabled services sector, then we'll just close shop and leave the country. In fact, this was said on television. Well, we've now put a tax on them. We've given up the tax holiday, and none of them have gone. They're here. They're here, and they're still making their profits, and they should be paying taxes. So it's not just that, that there are these things which get recorded in the budget. At different points of time, we have actually created sectors where the effective tax rate has got little to do with the tax rate which is supposed to be paid, 33-34%. And of course, this is true of some of the biggest corporate houses. The effective tax rate in some of the biggest. So if you put all of this together, I do think that we are in a world in which it is possible to get a significant increase in terms of percentage of GDP, of the tax GDP ratio. And if we do that, then we can definitely go away from the idea that the only thing we need to do is to control expenditure, because in any case, even that is problematic, because which is the fiscal deficit and which is the public debt to GDP ratio which is acceptable for a country like India is also something which is arbitrarily decided by whatever mandarins in the finance ministry or wherever it may be, without any explanation on why this number, 3% is a magic number, 60% is a magic number, they are just put out. But even if you leave that out, there are substantial possibilities of expanding expenditure and ensuring a better pattern of development, because it would be redistributive, promote growth, as well as reach some welfare. Thanks.
Thank you, Chandrasekhar. It's sobering to think about France the last few weekends and the violence there, which is really related to controlling expenditure equal to austerity measures. And I think the same questions have to be asked around the world. But I think my dear friend Devaki is probably going to dissent with the question itself, and it'd be nice to hear her.
I pleaded with Harsh that he should not bring me into this panel, partly because while I know public finance, I taught it, I learnt it, I have such strong, the feeling is not the right word, but I have such strong objection to the kind of growth path that we have now taken, where we have such gross inequality. Some of the wealthiest people in the world are Indians, and you have to go to Khan market to see what's happening to markets. And then you also know that there is not only unemployment, but that the labor is being pushed out of what is called formal employment, which gives them labor security, into informal. And that is necessary because of the kind of, economic program we are following, which is production for export, production of higher-end goods, and competing with China and others for cheap goods. So this whole package of how we are generating, or how we are looking after economy, or how we are generating growth, I find it uncomfortable making. And therefore, I was going to talk about that. But actually, it's not that I can't understand that we are talking about tax. But I think the taxation system comes in that we are not taxing the wealthy enough. I know Montek said that we're taxing perhaps in the right way, but I think we need to tax, and I think Piketty has got it when he says that we have to tax. But where I have a slight difference with Piketty is after he collects the revenue, he doesn't say where it should go. And I, for one, think it should go to broad-based employment, housing for the poor, and things like that. So that was one slice I was going to take. The other is this whole question of gendering economic policy, because in this budget domain, women asked for special financial quotas. It was called gender budgeting. Some of us feminist economists were against it, because the way it was implemented was quite trivial. For example, I'll give you an example. In one state, which I will not mention, when the money was given to the finance ministry that 15% has to go for women, the poor guys in the Department of Finance didn't know what to do with it. So they built toilets. Now, toilets and Swachh Bharat are now the fashion, so that's fine. But it was not going to where perhaps if they had consulted women. So instead of reserving money for women, some of the ideas that people like Renana, Jawala and I had was integrate or bring women into the main macroeconomic path. And there I must say Montek was very helpful. We had a small group of feminist economists in the Planning Commission. We called it Feminist Economists, FESDIG, not FESDIG, WGFE, Working Group of Feminist Economists, which I must say Saida Hamid had the courage to put together. What we asked Montek was, give us the chapters of the main chapters, that is infrastructure, agriculture, things like that, not just say the women and development chapter, which is where we were for several decades. You go into the women and development chapter. And we actually analyzed every mainstream chapter to see how we could put women's roles, which we knew as researchers, into that. B. Agarwal would tell us that farming is being done largely by women in small holdings because men are migrating out. So something in the agriculture has to go for that particular phenomenon and things like that. That was very helpful in my view. And then Renana Javwala made a suggestion which I think Montek accepted at the time, but I don't know whether it was implemented, that, one of the biggest allocations, or whatever you call it, of finance in the economic chapters is to infrastructure, airports, roads. So in that she said, we don't want us to go to welfare, but put 15% of infrastructure expenditure for bringing social infrastructure, build toilets, bring water in that money, because that money is a much bigger money than what goes into social welfare. So these were arguments to change the macroeconomic picture to make it more, not to give women crumbs, but to see that as a role that they play. But that is only on the plan. The other experience that I wanted to share was that when you try to take this money into what is called social development, as I did for about 8 years, I was a member of the State Planning Board in Karnataka, starting with Hegde and ending with Devegowda. And that was the time when we had decentralization as the big thing, Panchayati Raj. So money was coming, and in the district level, we found 531 people were functionaries. They were the ones who were carrying the money to scheduled caste, scheduled tribes, women, and so on. And naturally, it never went there because it was all eaten up in the delivery mechanism. So we said only 15 persons must be appointed, and the money should be given to the district development committee, and they would just use these 15 people to ensure that this money reached people. This was another kind of intervention in the administration of finance and development. These were some of the experiences that I was going to talk about, but I also wanted to say that there is no, in my view, we need to really attack the inequality of wealth and incomes. It's gross, the inequality. I'm surprised that, I think Montek did mention it, but he thinks that there is not that much. But I think Indian millionaires are a pain because they are making money. And while we are having not only a lot of poor people, but a lot of unemployment. So inequality of wealth and incomes, and a kind of strong push to give employment. I was showing Montek a thing that I saw from the World Bank, a new report. They say that in future, we won't need labor of the kind we use now. We would need to go into high-tech production, so they have to be trained in engineering and technology. I mean, these are things which I find, maybe because of my age, outrageous. I mean, there are hundreds and millions of Indians who are not only unemployed, but when they were employed in certain, what shall I call, formal employment with Provident Fund and all that, they are being disengaged. The latest data I saw was that 80% has been shifted out from what is called employment, where you get the benefits, into what is called the vulnerable employment, that is informal labor, which you have contracts and you don't get sufficient reward. So these shifts in the Indian economy, for somebody like me who in the 60s and 70s saw economists working only to provide employment to the masses, and there was all these schemes for rural employment, and we were measuring how much and how. To shift it to say now it's all going to be unemployed in informal labor markets, and the world is going to move towards greater inequality with manufacturing, with labor less manufacture, seemed a bit, to my mind, unacceptable and also undesirable. And I'm hoping that we can have a discussion on how to rearrange the macroeconomic arguments in India to make it less unjust. So I raised another question to the questions that Harsh raised, which is, do we need to look again? I mean, I had another question which I thought was more relevant. I would add the question, are we following the right economic drivers or economic theory for our progress, for reducing exclusion?
Thank you, Devaki. I think it's very apt, and of course the discussion around the questions of do we tax enough and do we tax the right people has to be located in our understanding of the macroeconomic policy direction that we need to take. And so there's a great deal, I mean, I think all our panelists, you would all agree, gave us a great deal of things to think about. And this is not just an academic discussion, this is a discussion that we hope that each of us in different ways, and those who watch the program as well, would take to policymakers in the run-up to the coming elections, as I keep repeating, because we can't see more of the same. And what changes do we want to see? So we have about 20 minutes before we close, and I thought that we could hear comments. My request is, as always, that we keep the comments short, and I will request my fellow panelists to take notes of whatever they'd like to respond to. Yes, but if I can, I'll just have one small rule, that if there's a hand up, I would take one man and one woman and one man, by that sequence. Since I don't see any women's hands, yeah, please, we'll start with you.
Thank you so much to the esteemed panelists and CES and the Wire for organizing this. My name is Sakshi, and I'm from Center for Budget and Governance Accountability. And one of the questions that I have is, given the fact that, I actually have two questions, but I'll just go for one of them. Given the fact that, there are fintech hubs that are being created in the using international financial services centers, abusing the SEZ Act of 2005, how do we begin taxing such financial services where, we know that a Facebook and a Google are responsible for tax avoidance across the world, but then how do we begin taxing financial services? We have no clue where their presence is, and it's also a hurdle for the government or the tax administrators to determine where their significant economic presence is in India at all or not. So that's my question.
Okay. You'll probably have a second chance if you don't have enough women's hands up for questions. Okay. Yes, please.
Thank you very much. It's an excellent panel. And I'd like to go back to where Rajeev actually started. And he said that for some reason, Indians are inimical to paying taxes. And I think that's a key question that he started. And then we started to see how this can change. So it doesn't really matter whether you're the right people or the wrong people. Nobody likes to pay taxes in India. I don't know about the other countries, but definitely not in India. And that problem perhaps comes from the understanding that we already have in the country that putting money into the formal sector in the hands of the government doesn't do you any good. It makes much better sense to hold that money back, irrespective of whether you have the formal economy or the informal economy, and build an asset. What Piketty picks up in his book, because he's come up so often, Indians have known for millions of years, that you build an asset, it tends to make you richer much faster than if you had a labor income. So this use of the word wealth and income in the same breath is an error. You can have labor income as long as you like. You'll never be able to make it as fast as somebody who has wealth. And Piketty has great problems trying to understand who has how much wealth. He's saying, I have a lot of difficulty. I go to Fortune magazine and I, reach these, rich Ambanis or rich Indians. I can't make out how much wealth we have because they're in all kinds of forms. And I thought perhaps the panel, anybody, would like to kind of handle how this is going to be managed, because this is not an election-related issue. It's an internal understanding of every farmer that if I own even half a meter of land, I somehow have an asset. And that's going to grow faster than if I just became labor. This could apply to a cow. if we call our economics economics, it's UW, yeah. So would you like to just kind of, this is not an election issue, this is not a 2019 issue. This is a real problem that Indians prefer to be rentiers, work less, get the other guy to work for you. That's the best way to build your asset, your gross blocks go up.
Hi, I'm Srishti, and my question was similar to what the point he raised. So we talked a lot about increasing taxes, but at the same time we know little proportion of population actually pays the taxes. So how feasible would be increasing taxes as the suggestion goes? And also, shouldn't we also be considering and talking about efficient utilization of the tax collected than increasing the taxes?
I think we could go back to you since you had a second question. Yes.
Thank you so much. I am not very sure of whether this is already documented, but this is just for my curiosity and perhaps will help others as well. Do we know how much revenue foregone actually happens with free trade zones and special economic zones? And is that recorded in the revenue foregone statement in the budgets?
Yeah. The revenue foregone statement itself has disappeared. So
yeah. I mean, it's in the annexure now.
My name is Abhishek. I kind of want to go back to Dr. Ahluwalia's point about philanthropy, and especially philanthropy in the US. And if we allow tax, or we tax the inheritance, and assumption is that people will give to a foundation and stuff like that, will that fly in India? And the idea that the corporations will be run by professionals and all, you kind of discussed that point. And in the US, the nonprofits are the fastest growing job market and also the industry. So can we see growth, to Devaki's point, can we see growth in the non-profits through that process?
This question is for Montek. You said that there hasn't been any measurement of inequality or some such thing. I think it's an Anglo-Saxon obsession that we need to measure certain things when they're so obviously explicit and visibly, like Devaki said, we can see that everywhere. So I'm not sure that really needs to be measured at this juncture at least. And if you look at the rural spend on healthcare that we find in where I work in Jharkhand and Bihar, people spend as much as 85% of their income on healthcare. So if you were to spend, if you were to increase the proportion of GDP by 1% towards healthcare, I don't think it'll go very far. So I would like you to consider that again.
Right. Yes, please.
The panel was really good. I'm an undergraduate student, so I really wanted to know, since behavioral economics is gaining so much of ground with Thala and Kahneman, like, is there a way through behavioral nudges that can prove to, like, taxation policies as a whole to be more efficient? Like, people can be nudged towards making better decisions while paying their taxes, and they shouldn't evade it. So can there be a policy implementation in those lines?
Okay, I can take two more questions. Yes.
Thank you. We are trying to improve the taxation policies and trying to increase the tax revenue. But here, are we not trying to address the symptoms rather than the disease? Because in our Indian democracy, the way the elections are conducted and the way the money is going to other things that is not actually coming to the needy people, don't we need to address that issue, fundamental issue first? Then maybe we can have an economy where we need not have a tax also, because the amount of money that we save from these elections and the other processes, don't we need to fundamentally look at the way our democracy works itself?
So you talked about there have been no reforms in tax administration. So if you can throw some light on what kind of reforms should we have particularly? Also, if digitization has to play some role, because as far as I have read, inheritance tax was majorly abolished because the administration cost was way more than what was being collected. So is digitization going to revolutionize this?
This is directed towards Dr. Montek Singh. I may be corrected if I am taken it wrongly. You said superior education facilities available in the US because of the taxation policy. If I'm not wrong, all the superior, the tier 1 and the Ivy League started off as theological education centers. With the result, they were not taxed. And even now, they don't pay tax. And they have the largest corpus of hedge fund money. So actually, it's just the opposite of what I have understood. I may be wrong, that the the non-taxation of all these Ivy League and the Tier 1 have actually made it possible for them to be of such high superior standards, just as our not taxing the IT, I come from Bangalore, has made this major jump of Infosys, TCS and Wipro from the $1 million to the $1 billion. I stand corrected.
Sir, with this recent GST, people are still trying to avoid it. Recently, there are few lockers were private caught, and people don't want to put their money in banks. And this is one of the way they say government-sponsored terrorism, GST means. And recently, you know, when Prime Minister VP Singh was there, he had a very innovative idea to give tax-free salary to government employees. So if you can do that, then you can expend net from 3 to 10%. So is it possible to do it?
Okay. So I think that's a range of questions, and the GST is also, you know, strengthening indirect tax, which you know, is not seen as a progressive form of taxation. So also whether you'd like to see whether we were going down the right track by placing so much of our bets on GST. So could we start with Devaki? You could we could come down this way. And
nothing to say.
No, you must. Okay. Montek, Dr. Ahluwalia. Yes.
Well, I mean, lots of very good questions, but to be honest, they're not necessarily addressed only to me. So I'm just going to respond to a few. One is the issue of, I mean, I agree with you that lots of things you can see, even though you can't measure. So I didn't mean to say that there isn't inequality. I just said that it's very important, but there's no official data which says inequality has increased. Now, you know, in a public debate, it's very important to have official data. Of course, official data can keep getting rewritten, but you know, in the absence of official data, it's very difficult to put something on the agenda. And I mean, if other countries have data on income inequality, and I think Mr. Chandrasekhar mentioned that there are non-government surveys. I don't see why government surveys can't do that. So I was merely saying that we should have some official information, and I would not be at all surprised if inequality is increased. I mean, you know, in a very poor country, when you're trying to get growth to take off, it is virtually impossible. Let's say you're moving from a 3% growth model, which is what we were getting in the 60s and 70s, when all these people were worrying about things, and you want to get to, let's say, 7-8%. It's not going to happen uniformly. I mean, what typically will happen is some part, whether it's a regionally defined part or a sectorally defined part or a higher skilled part, these fellows will sort of surge ahead, leaving others behind. Now, there are two kinds of problems. One is, are they actually destroying traditional activity, which is actually hurting people, or simply leaving them behind so that they can catch up later? The first is actually a malign behavior. The second is not necessarily malign, but it creates a lot of social tension. Okay, so I'm not surprised that inequality is increased. I agree that what has happened, by the way, is that, you know, inequality is now not discreetly hidden. I mean, in the old days, there was a lot of inequality, but everybody behaved in a certain cultural sort of way, and nobody actually minded the extent of inequality. Today, because you have new money, all of a sudden you have people saying, you know, this fellow was nothing 20 years ago, and now he's riding around in a BMW or a Mercedes. You know, there is greater awareness, and TV puts that across. So people are much more aware. In fact, only 20 years ago, the debate used to be, why is poverty not going down? And we were all saying, yes, we're doing this and we're doing that. And then when poverty went down, we said, well, you know, look, poverty has gone down. But by then, nobody was interested in poverty going down because people were more interested in getting quality jobs. The whole debate, and I mean, this is good. When you get away from a situation where you're preoccupied with one thing, governments should be forced to look at the other. But the problem is you need to have some good data to force a debate. I mean, at the moment, for example, it's absolutely correct that what many people have said, that employment is not in the formal sector. Okay, it's certainly better to have employment which is not in the formal sector than to have no employment at all. But it creates a huge amount of social unrest. I mean, look at the Manesar agitation of Maruti. You bring in labor from Bihar and you make them all contract workers. They get earning much more than they were earning in Bihar. They even send their money back. So maybe for the first couple of years, they feel that's a good thing. But soon they realize that there are 30% of the workforce which are formal labor, highly protected, doing the same thing that they're doing and getting twice the money. Before you know what's happened, they're deeply unhappy. So, you know, the question of what causes harmony in a society is a psychological thing. I mean, it's no point asking economists. Generally, this is where the NGOs do help, in fact, by drawing attention to certain problems. But the answer to that is not taxation. It's a whole lot of other things that we have to look at. I'm not entirely convinced that we know what is the alternative growth model that will solve the problem. We have an alternative stagnation model. That is, you know, what is all this material wealth? Our traditional values don't emphasize material wealth. As long as you're getting enough to eat, you should be happy. That's certainly an internally consistent model. But I don't think younger people are going to be satisfied with that. So, I mean, then you get to the question, how do you promote more formal employment? Immediately you have a debate. You have one bunch of people with whom, actually, I must confess, I tend to agree that, you know, our labor laws actually discourage employment. Another bunch will say, no, that's nonsense. I mean, you know, you need to protect labor rights and don't give in on this. Now, this is the issue on which there needs to be a debate. I don't expect that you will get... I'm not sure in this... Let me ask, for example, how many people in this audience believe that weakening labor laws, which will weaken the rights of those who are already employed but encourage more people to be employed, is a good thing? All those who think in favor, please raise your hands. That's a very delicate raising of your hands. I mean, you want to vote. You want to vote discreetly. And those who feel that there should be no weakening of labor laws, raise your hands. So clearly, that's a majority. Okay. So that's it. I mean, but I don't agree with all of you. In the sense, what I think you are doing is you are condemning the system exactly into where it is. That is, I mean, I discussed this with trade union leaders of both the communist parties when I was in government. And I was saying to them, listen, our interests are aligned because if I'm right, you will have more organized labor, which is what you want. If you don't do what I'm saying, you're not going to have formal employment, and you cannot really have organized labor in the informal sector. So we've actually, the policy, this is a provocative way of putting it, the policies we are following are counterproductive. There are many other, I think CP raised this point about the fiscal deficit. He's absolutely right. I mean, who says 60% of the GDP is a good number? Who says, the answer actually is, the usual answer is that, you know, 6% of GDP fiscal deficit is more than twice what other developing countries are having. And certainly 60% of the GDP is much higher. But then you could ask the question, what does it matter? We are different. So, you know, when you get down to solutions, it's not a simple thing, and you need a debate that will bring greater convergence. Otherwise, why should a politician listen to any one or the other? Because there are always some hands going up for one and some hands going up for the other. So that's one point. 1% on health. I mean, you said you don't think it's going to be enough. What I meant was that, you know, India spends 4% of GDP on health, which is apparently the norm. Only thing is that most of that 4% is out of pocket, which is the case you were making.
It's 3%, but it's about 2% of it is out of pocket.
No, I think the figures I had seen earlier were 4%. But I mean, I'm sure we're not doing enough. And most people said half should be from the government. Hence, one should go up to 2 to 2.5%. So between 1 and 1.5% more on health is what is needed. But you know, in my view, the real problem is a lot of what we are doing, for example, these insurance schemes, etc., are not actually delivering primary health and not delivering preventive health. And maybe what you need is the other leg of the health program, that is strengthening the primary health centers.
Through public provisioning.
Through public, yeah, that has to be public. But the huge problems there in being able to recruit doctors. We don't have enough doctors. So, you know, I don't think all these problems should be reduced into a money question. Because I don't think that there are deeper supply problems which need to be addressed. Otherwise, we're not going to find a solution. Mind you, there are solutions. Some people say, well, by the way, this becomes highly, as I discovered, highly controversial. Because if you say that in a bunch of doctors, the immediate revolution. Well, yeah. I mean, we had proposed in the Planning Commission that a 3-year certification should be good enough. I mean, basically, you should be allowed to prescribe antibiotics. But ask the MBBS guys.
Yeah.
No, I'm not pronouncing on this,
Yeah,
but what I'm saying is these are the examples where controversy comes in. Yeah, on the US, you know what I meant, I'm sure that they don't pay taxes on their income, but actually, I don't know whether ours have to. I don't think they have to. A lot of these endowments are really people donating to their institutions, and that is a tax break. So a person wanting to avoid estate tax could gift away a large sum of money to the university they went to.
And they actually reapply those funds into very fine financial tools to make more money, the university.
Could be. Yeah, no, they have, but you see, the thing is that they have a totally professional approach. Yeah. 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 But
so they reemploy it to make even more money in very fine ways around the world.
yes, that's absolutely true. Anyway, those are the questions that I had picked for myself. One point about special economic zones, and you know, there's a lot. I think these are what are called tax expenditures. I think CP mentioned that. You know, a lot of people who talk about special economic zones say that the way those things are calculated is that if I'm exporting $10 billion, which requires about $4 billion to be imported, and that import is duty-free, then the normal duty that would have been paid on the $4 billion is treated as a tax expenditure. But the exporters say that, look here, if you put that duty, there won't be any exports. So it's not the case that is really revenue loss. However, when you have things like you're giving an incentive allowance, that's a genuine tax expenditure. In fact, you know, as again CP said, that the actual tax rate paid by our capital-intensive industries is very low. But that's because you have a relatively high tax rate, and they're able to escape because of investment allowances. But the non-capital intensive industries are not able to escape. So actually, if you were to get rid of the investment allowances and lower the corporate tax rate, it's the labor intensive industries that would benefit. Again, if you go to FICCI or CII and ask for a show of hands, you will not get a majority on this. All the hands will go up saying, no, don't do that. It'll disrupt growth. So that's just some examples.
Professor Chandrasekhar, just briefly. Yeah.
Okay, I'm just going to take, make 2 or 3 points. The first is on the fintech issue. You know, I don't think we should operate with this understanding that it's impossible to govern the digital space. The EU has shown us quite a lot. India has demanded data localization. I mean, if you can ask MasterCard to actually keep servers in India with all the information, you can ask this exchange which is doing all this fintech-based transactions to maintain the data, and government should have the right to inspect it for tax reasons. So So, you know, this whole idea that there's no way you can regulate is also a myth which is partly spread. I agree that, you know, a revenue deficit should be zero, but that's different from the fiscal deficit. Why not borrow and spend? So why should the fiscal deficit be 3.3? I mean, the European Union decided to have a 3% fiscal deficit as part of the Maastricht Treaty. Now Italy has said we are not going to. I mean, most of them haven't followed it. They use, you know, interesting accounting procedures to always meet it, but actually everybody knows they're not. Yeah. Yeah, but is the range? Well, but the point is, you know, I was talking about the welfare. I mean, the fiscal deficit, not the revenue deficit. I mean, the revenue deficit became negative during the 1980s, you know, when we were running. Finally, unfortunately, Montek is left, you know. I mean, on the vote he's asking for, the problem is the way the question is posed. You're saying that employment will increase if you get rid of evidence there's no evidence to suggest that employment will increase. So you know, there's a problem about that. And anyway, the gentleman is gone who asked about taxing this thing, so I shall not go into that.
I think the remaining gentlemen and women will go also if you don't finish soon. So I just want Rajeev to have the last word.
Thank you. Thank you. Actually, thank you for very interesting questions. And I actually feel like engaging with quite a number of them, but there's no time. So I'll just take a couple of them. First of all, I wanted to correct one misperception which was floated around by one of the panelists, I think Mr. Ahluwalia. I think the first company in the world which modeled the idea or presented the idea of trusteeship to run business is Tata's. I mean, how can you forget Tata's? It's not something that we have to learn from the West. I think it is all here. 67% of Tata's is owned by the various Tata Trust. So, I mean, we need to know what we have here before we, you know, look towards the West. Absolutely. But I want to actually engage with two questions, one from your side and one one on how do we go about raising the tax GDP ratio. I mean, your question, Indians don't like to pay taxes. Why? It's because we have a system which allows them to not pay taxes. Absolutely. I mean, we have a cash economy. Do you know after demonetization, we have more cash floating around in the economy than we had prior to the demonetization? Everything is back to square one and perhaps a little more. So the system is allowing you not to pay taxes. But there's another reason, which I think you alluded to, but let me put it differently. What is our system? Our system is, because of the nature of economy, we have backward regional disparities. All the elastic sources of revenues were in the center. The kitty was to be built up in the center, and then ways were to be devised to allocate that money to different. What did that do? It took the revenue decisions to the center and divorced them from the expenditure decision. The way to get Indians to vote, to pay taxes, and to streamline our system is to decentralize this process, to localize it, which means the kind of taxes which are not being raised right now, property tax, which is so very important, or inheritance tax, and so on and so forth, can be raised, can be the source of revenue for the local government, and they would also be perforce made to spend that money judiciously because they are on the ground. So the only way to change the system is to decentralize revenue and expenditure decisions. That's right. And now, to reinforce this point, if you look at the West, if you look at Brazil, or you look at US, which is the strongest arm of the government? A local government. Why? You know, you won't be able to tell me who is the governor of Massachusetts, but if I ask you and dig you a little bit, you might be able to tell me who's the mayor of New York. It's because the local government is strong, and both the revenue and the expenditure decisions are closer. And we need to do that. This is where India has to be maybe 10, 20 years from now. But we haven't done that. Why? Because there are these vested interests to have a strong central and then have a counterpart of center at the state level and nothing below that. So the way around is... distribution, if it is both collection and distribution, if they are too far aloof from where it needs to be done, you don't have accountability in the system. And we need to change that. There's a problem on both sides. In fact, I would go to the extent of saying that we should have these discussions on taxes independent of discussions on public expenditure. In fact, I would take a step that no, that's not a fair judgment. I don't think it's a fair judgment. What I would say is any transformational government should first set up its public expenditure goals, the public's goods that it wants to supply, and then look at the taxation that is required to raise those resources. What are we doing? We don't tinker, we are just tinkering around with our tax system and letting our expenses or expenditures come out of the wash from what we are able to collect. This is not a way a transformational government should be looking at. It's not really a political problem. I think it's a problem of perceptive leadership, and not only just political. Down the line. So I think the solution is there, and if that happens, I think things can change quickly. And just very rapidly, how do we go about changing our GDP ratio quickly? Or before that, let me just add on tax administration. A lot has actually changed on the direct taxes, on the personal income taxes. I have run an experiment on myself. While I was sitting as advisor to the finance minister, I would deliberately pay a little more tax year after year. And I was filing my returns electronically. 1 year I actually accidentally, not deliberately, deliberately, I ended up paying some 70-odd thousand more in taxes because I was doing some consultancy. But will you believe it? You file your returns in July, in October you are getting the funds. And this is an anonymous way of filing because you're doing it electronically. So what I'm saying is, there is progress on tax administration only insofar as personal income taxes are concerned. But when you look at the indirect taxes, GST was supposed to give us the solution. But there have been several missteps on the way we have implemented GST. And it's only on hindsight that we are correcting some. And we still have to wait for maybe another couple of financial years to see the data coming out of there to figure out whether we need to tinker it further. But if we do roll out GST as it ought to have been, a lot of the avoidance, tax avoidance would disappear. See what's happening right now. I'm a salaried person, so my income is known. I can't fudge my income. But you are a shopkeeper, and there's a producer sitting next to you. He doesn't pay tax even to the extent of 30% of his production. As a retail or a wholesale person, you don't pay any tax. I go to the retailer, he says, sir, if you want to buy this, it'll cost you 1,500 with the tax receipt. Otherwise, you have to pay only 1,200 or 1,300. Even I choose to buy it for 1,200 rather than 1,500. So what I'm saying is, the only way to get rid of our tax avoidance is to get our indirect taxes in order, and GST is the way, but not perhaps the way we have rushed it in the last year or so. However, the silver lining is, if we hadn't rushed it, it would have still lingered on for the last, like it did for the last 12 years. So maybe as we go forward, we would learn from our mistakes on GST implementation, correct that, and that should allow us to raise a few percentage points in our tax GDP ratio. Well, I think Harshji would be better placed to. I'll stop here because I think.
So, friends, I thank the panelists and the audience who are present, and the panelists and audience who are absent, both who contributed valuably. This was an interesting sort of format where my very weak chairing allowed people to have conversations as we proceeded, but that was great and we enjoyed it. I think the last point that I wanted to really say was that it does make sense to talk about taxation when we talk about what we're going to do with the money. And it is in the context of the imagination of a social welfare state where healthcare, education, pensions are universalized, that we are talking about the possibility of that happening through a different kind of public taxation system. I think quite clearly, I saw in the earlier two debates, the debates didn't end here and they continued within the panel and beyond the panel, and I hope that that happens again. Our next debate, we're very clear, has to be on agriculture and how do we make agriculture viable, and we hope to do that early February. And thank you all once again for being here.
To receive instant updates on all videos from The Wire, click the subscribe button and hit the bell icon. Pay to support independent journalism. Click the link in the description and choose the amount you want to pay.